Welcome to Market Atlas Weekly, your complete recap of the global markets for the week of June 22nd through June 26th, 2026. We'll break down the biggest stories in stocks, AI, earnings, commodities, crypto, global markets, and the most important events for the week ahead. Let's get started. 5 key events shaped the markets this week. The Federal Reserve kept interest rates unchanged, while investors continued to search for clues about the timing of future rate cuts. Oil prices declined sharply, helping ease inflation expectations as the US dollar gained further strength against major currencies. In Europe, investors assessed the latest signals from the European Central Bank, while attention gradually shifted toward next week's economic releases and corporate earnings. Together, these developments kept overall market sentiment balanced, with investors remaining cautious ahead of another busy week. This week's macroeconomic data largely met market expectations. Core PCE inflation showed further signs of moderation, supporting the narrative that inflation continues to move in the right direction. The Federal Reserve kept interest rates unchanged, leaving investors focused on future policy decisions and incoming economic data. Treasury yields edged higher as markets adjusted expectations for interest rates, while the euro area's manufacturing sector remained under pressure, with PMI continuing to signal contraction. Taken together, this week's macro data reinforced a picture of slowing inflation, steady monetary policy, and an economy that remains resilient but closely watched. This week, the U.S. market told 2 very different stories. While the Nasdaq and the S&P 500 moved lower under pressure from large technology stocks, the Dow Jones and Russell 2000 finished the week in positive territory. Investors rotated out of mega-cap AI leaders and into financials, industrials, energy, and smaller companies, creating a much broader market leadership than we've seen in recent weeks. The heat map highlights this rotation, with technology among the weakest sectors, while energy and financials posted some of the strongest weekly gains. Overall, the market remains healthy, but leadership is beginning to broaden beyond the AI trade. This week's earnings season delivered a mixed picture across several key sectors. FedEx and Carnival reported results that highlighted continued resilience in transportation and travel, while investors remained focused on future demand and company guidance. Micron once again attracted the most attention, with another strong quarter driven by robust demand for AI memory solutions. Despite solid results, the stock finished the week lower as investors locked in profits following its recent rally. Paychex delivered another stable quarter, reflecting continued strength in employment-related services, while McCormick stood out with one of the strongest positive market reactions after exceeding expectations. Overall, this week's earnings reinforced an important market theme. Strong quarterly results alone are no longer enough. Investors are placing greater emphasis on forward guidance, margins, and long-term growth expectations. Artificial intelligence remained one of the market's strongest long-term investment themes this week, but investors are becoming increasingly focused on fundamentals rather than hype. Spending on AI infrastructure continues to accelerate, with cloud providers and enterprises investing heavily in data centers and next-generation computing capacity. Micron's strong earnings reinforced the growing demand for AI memory solutions, although the stock pulled back as investors took profits following its recent rally. Across the broader technology sector, markets became more selective. Investors are paying closer attention to valuations, earnings execution, and long-term profitability instead of growth stories alone. The key takeaway is clear. The AI cycle remains firmly intact, but leadership is now being earned through strong financial performance and disciplined execution, not simply participation in the AI narrative. Looking ahead, next week will be one of the most important macroeconomic weeks of the summer. Investor attention will focus on a series of U.S. labor market reports, beginning with JOLTS job openings on Tuesday and the ADP employment report on Wednesday. Manufacturing PMI data and weekly oil inventories will also provide fresh insight into economic activity. Thursday will be the key event with the release of the June non-farm payrolls report, the unemployment rate, average hourly earnings, and weekly jobless claims. These figures could significantly influence expectations for future Federal Reserve policy. On Friday, U.S. markets will be closed in observance of Independence Day, resulting in lower trading volumes and reduced market liquidity. Overall, traders should closely monitor labor market data, Treasury yields to the U.S. dollar, and the technology sector, as these are likely to drive market sentiment throughout the week ahead. As we wrap up this week's market recap, investor sentiment remains cautious despite resilient equity markets. The CNN Fear and Greed Index closed at 25, remaining firmly in extreme fear territory. While stock indices continue to show resilience, investors are clearly positioning more defensively ahead of next week's key economic data. Market indicators paint a mixed picture. Volatility eased slightly. Treasury yields remained elevated. The U.S. dollar was broadly stable. Gold advanced as investors sought defensive assets, while crude oil continued to decline throughout the week. Looking ahead, strong corporate earnings, resilient consumer demand, and continued investment in artificial intelligence remain supportive for the long-term outlook. At the same time, labor market data, Federal Reserve expectations, and elevated valuations in the technology sector remain the biggest risks to monitor. Overall, our outlook for the week ahead remains cautiously bullish, with expectations for higher volatility as markets search for their next direction. The semiconductor sector remained at the center of investor attention this week, although performance varied significantly among the industry's largest players. Nvidia came under pressure following its annual shareholder meeting, but management reaffirmed strong long-term demand for AI infrastructure and confirmed that the Blackwell platform rollout remains on track. AMD briefly reached new all-time highs before profit-taking emerged after an extended rally. Despite the pullback, investors remain optimistic about the company's long-term AI roadmap. Broadcom continued to face selling pressure as investors became more cautious toward richly valued AI stocks, even though the company's long-term fundamentals remain solid. Micron delivered one of the strongest earnings reports of the season, highlighting exceptional demand for AI memory solutions. However, after a sharp rally ahead of earnings, the stock finished the week little changed as investors locked in gains. Overall, AI leadership remains firmly intact, but capital is rotating within the semiconductor sector. Strong execution continues to be rewarded, while premium valuations are facing increased scrutiny. That wraps up this week's edition of Market Atlas Weekly. Despite elevated volatility and cautious investor sentiment, the broader market continues to be supported by resilient economic data, solid corporate earnings, and the long-term growth of artificial intelligence. As always, successful investing isn't about predicting every market move. It's about staying informed, managing risk, and maintaining a disciplined long-term perspective. If you found this analysis valuable, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss our weekly market recap. Thank you for watching, and we'll see you next week with another edition of Market Atlas Weekly. Stay informed, stay ahead.